Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good evening. Ira Epstein of Linn & Associates with your financial market update for Tuesday evening, and we're at 5:07 p.m. Central Daylight Time on Tuesday. That's the 24th of October, which means we're already just opened the Wednesday trading session. Remember, at 5 p.m. Central Time, many of the markets open. There are some exceptions. Dollar index isn't open yet, for example. The soft commodities aren't open yet. You can see that in the cotton and the sugar. And the grains aren't open. There's a few others, but not many. All right. Just now, the Senate has passed the AIDS package for $36.5 billion due to the disaster relief from all the storms. So that goes to the president for a signature. We're awaiting the president's decision at any time. It's up to him when he's going to announce the next Fed chair. He's given the indication before he leaves for Asia he will do it. That will impact how the markets respond to the dollar, how the market's going to respond to interest rates, where that goes. On Thursday, we have the European Central Bank. They're going to help us to decide, is Europe ready to stop or taper back its quantitative easing program? Yeah, it could be either one. The market greatly expects it's going to be a combination of lengthening it beyond the December cutoff and cutting down from the $60 billion a month into something closer to $40 to $25 billion a month, and it will go on for 6 to 9 months at least. We'll find out. Those are the expectations. Then what's moving the stock market have been earnings. Now, we are in the heart of the earnings season. 25% of the S&P 500 companies have reported. By the end of Friday, about 50% will have reported. Today's market was moved dramatically in the Dow, off Caterpillar, off of 3M, which had great earnings, and they just lifted the markets. Now that that's gone by, the markets are now retreating a bit, but you don't know what to make out of it. Metal markets, sort of dead in the water. The copper market, and probably platinum to a degree, palladium especially, all three of those are going to look very hard to see tonight at 11:45 Eastern Time. Chinese President Xi will make his speech. Remember the time differences. This is the end of the 19th party. Not exactly sure, and I don't think anyone knows what's going to be said, but we're going to get the 5-year program, and we're going to find out how it looks for base metals, what they intend on doing with credit, if anything, within the country. A lot of people think that there's a credit bubble, a housing bubble. Who knows? Yet their economy continues to grow at a clip of 6.5%. What's it going to do for the energy market? Is it going to offer something more from there? So there's a whole lot going on. When we go to a weekly chart of the E-mini S&P, the highest close we've had so far is 25.74, and we're 10 points off of that at current rates. When we go to a daily area chart of closes, that same high close, and the market's still that 10 points off of it on the daily basis. Here's the opening tonight that you can see, and you can see you're caught here in the high 25.70s down into this break low. And when you put the swing lines on, it's easy to see the numbers, okay? So you're here with your break low, your rally highs 25.77 1/4, and I say you're caught in that area right now. Now, what markets often look for is a neutral zone on a chart if they step out of a trend. Now, let me define the word trend for you. We all can see in plain English that the market's in a big, broad uptrend. You certainly don't have to watch Ira Epstein to know that the stock market for 8 years has been a runaway game, right? But what does happen is when using leverage on these indices, they from time to time, in fact, often, not time to time, often step out of a trend and regroup, if you will. That regrouping can take a short period of time. This market stepped out of the trend when it broke through a previous low and then made a higher high. I don't define a higher high and a lower low as a trend. I define higher lows, higher highs as a trend, or lower highs, lower lows. The stepping ladder, up or down, is trends. This isn't one. When the market's looking for a point to consolidate, often, not always. It looks to go back to short-term moving averages. Now, I look at the 18-day average as one of the most popular. My rule of thumb is when the market is over that average, I say the market has upside bias. When it's under it, it has downside bias. It also filters what's going on with the swing line in some of my other studies. I don't show you everything in these videos. If you go to our website, www.iraepstein.com, and go under education, I have videos there as to how I teach charting in a video course. It's quite simple, actually. A key number that I learned years ago from John Bollinger, when I used to have a TV show called Stocks, Options, and Futures that I syndicated around the country. It's when the old financial news network, which became CNBC, well, this used to air, and I used to have these different analysts, the Fibonacci people, the Granville. I mean, I've known, I'm older, obviously, so I know a lot of these people, and I'd ask them about their indicators. I'd wanted to learn because I'm a technician. Well, the concept is the way I look at it. This represents resistance. This represents support. In addition, they will, at times, these numbers be moving up. They can be going sideways, the black lines. They could be pointing down. I always tie them into momentum. I'm always looking at momentum. And in the slow stochastic study, momentum is waning. It's losing itself right now. Often, I wish I could use the word always, but it's not accurate. Often, when you lose momentum, if on a closing basis that happens, not intraday. Intraday, you lost this like this today when the market was down and unchanged. Later, when it spurred up, it was able to rescue itself by the close, by a hair. It had to be up 3.75. I had figured out, and I wrote in my morning report, that around 1 1/4, 2 points higher, you weren't keeping that embedded reading. And it might have lost it when I did my morning subscriber video, when I record 40 charts in the morning for my subscribers. And I do have a paid subscription, so they get to see a lot more than you're seeing here. But suffice to say, it started waning, and I pointed that out. And of course, then I felt stupid as the market came back during the day and closed higher. But I'm not wrong. The market is losing upside momentum, and it's like a beast. You got to keep feeding it. You need a 3M. You need in the morning Boeing to come in with strong earnings to make it go back up. But on its own, it acts like a market that wants to return to that 18-day average to figure out what next. That's where I'm viewing it. The market that is not doing that is the Dow. It's 30 stocks, big companies, as they're reporting. They're keeping this market, remember what I said? Riding the upper Bollinger Band bullish, and often that goes hand in hand with momentum locked in. Locked in means instead of it pointing up, if you'll notice, it's going sideways over 80. It converted itself from overbought to a locked-in trend, bullish. And it's been staying like that ever since here. And if you look, you have to go back to the beginning of September to see where this market was trading under that 18-day average. By any stretch of the imagination, this has been a powerhouse market in all the stock indices. A market that started losing, and I'm going to come to the Russell first. The Russell was losing its momentum the first of all the indices, and I began writing about that nearly 2 weeks ago when the market started fading and lost its embedded reading right back here. Here on the 16th it had it, you lost it the next day. That often leads to price and the 18-day average coming together. Can the market go lower than that? Of course. There's no magic, but the point is, the norm is it tries to go to a neutral area, and I term the 18-day average as neutral. Then it began playing. Now remember, we're tomorrow going to be on the 25th, so this is a week ago. This is October 18th, and as you can see, it began playing. But as it's playing, look what's happening. The Bollinger Bands are rushing to the market, and they're narrowing in dramatically. When that happens, it's a sign of, first, loss of volatility. You can see that happening here. Second, I view this as like a pipe. The longer the market can stay in the pipe lengthwise, the bigger the eventual move up or down. Right now, is the market trending? Well, yeah, you've got higher lows and higher highs, but it has downside bias because it closed under the 18-day average, and momentum is pointing down. Problems. The VIX. The VIX has a higher high and a lower low. Now, I had been pointing out to you right through all here that this is a sign that the market is just what I said in the other, in this, see, like the Russell. It's winding itself up to do something. It's been easier to get an up move than a down move because you can go up 10, 15% and just go back up to 12. But to drop from this current level of 10.3, 10%, you're going to go to new contract lows. Pretty hard to get it done. That's what I've preached here. If you can go to the videos, you'll see that. So the market's playing right now at this 18-day average, gets over it, and has so often been the case, it doesn't hold over the first move over it. We've seen that over and over. Pulls back, but then it starts Monday pushing on that number with momentum up. There's no trend because you got a higher high and a lower low, but you have upside bias. You got day one over the upper Bollinger Band, and today is day two. So suddenly the market is trying to widen out the Bollinger Bands. We've seen that before. Did it here? It widened them out like it did there. There's no secret to it. Look at how it widened out here when we had that monster day spike. The issue is the combination of losing momentum there and this market wanting to climb higher means a bit more risk is suddenly showing up in the market. When we go to the interest rate sector, keep in the back of your mind that the lower this ETF called TLT goes, it means higher interest rates. We have a downtrend. We've had lower highs. We've got lower lows. The first downside target was missed today by 4 cents. Not bad. It got pretty close to it. Could hit it tomorrow. And momentum is still down. A downtrend, market pointing down. Same in the bonds, the 30-year bonds. Lower highs, lower lows. You hit on Tuesday, the day I'm recording, the lower Bollinger Band. You're bouncing a little and you're oversold. So the market has hit its downside target, unlike the TLT. In the 10-year note, you are oversold. In a downtrend, you've been hitting. In other words, continually hitting now the lower Bollinger Band and riding it. Very bearish situation, even though you're oversold. Higher interest rates. The dollar index went up to the combination of the green, which is the 100-day average, in the upper Bollinger Band in one of these tight bands. See that? And it broke back on the close. I wish I could tell you what it's going to do from here, but I will not at all be surprised to see the market retreat to the 18-day average to regroup. If the market starts closing over the upper Bollinger Band, I may join then the parade. You're in an uptrend, the bias is up, and you're going to start pushing that out to higher numbers. I have not joined that camp yet. When I come to the euro currency, you've got lower highs and lower lows. You're in a downtrend. The market's under the 18-day average. The bias is down. Momentum is flat to trying to push lower. Now, if we see the European Central Bank change their tune and decide to do nothing at this meeting, I would guess that that market is saying it could be bearish. If they surprise the market and go for, let's say, a $25 billion purchase starting after December, a low end of estimates, and maybe ending in 6 months, that would be considered friendly, this market. So you got to understand what the trade might be looking for. I don't know what it'll do. In the Aussie dollar, lower highs, lower lows. Bearish, under the 18-day average. Bearish, momentum pointing down. Bearish, downside target could be the lower Bollinger Band. Resistance pretty formidable now at the combination of the 18 and 100-day average of closes. And the Japanese yen, lower highs, lower lows, bearish, oversold. We know the easy money policy that's gone into place there. In the WTI versus the Brent, or Brent versus WTI. Yesterday you fell back to that 18-day average, and today you bounced away. What do we say of that 18-day average of closes? It's often the spot where the market tries to regroup from. In the Brent crude, you've got a pattern of higher lows, with today having a shot to the upside. But notice the market had a heck of a lot of problem. Got to 58.57. The upper Bollinger Band's 58.59. You're overbought and stuck in this sideways action. If you don't break out of it, path of least resistance might be back down. And while we're trying the upside again in this market, you had the high, you had prior to this the lower highs. Today changed that pattern. That's why I've got these three lines here. Now you got a low, a higher low with an outside day up in that. Take out 51.55, the game changes instantly on you. I wrote a gold report today, and that report covers on a closing basis only where I see the breakouts in the gold market basis the current contract. If you'd like to get that along with the seasonal chart, I didn't include the price counts, I didn't include daily charts. I went to one thing because that's what I think gold's looking at. You can get it. Go to our website. It's part of our futures kit, but ask for my research as well and you can get it. How do you do that? Give us a call. Go to our website. You can click up here if you're watching me on YouTube, or underneath us it says click here for Ira's free information. I'm Ira. Have a good day.